Okay. So the United States stock market consists of a few units. We're going to have a couple of indexes, and one of them is going to be the S&P 500. Okay. The S&P 500 is going to consist of 500 leading companies that are listed on the United States Stocks and Exchange. Okay. So these are going to be major companies, big companies. Okay. And there's going to be a way to check what companies there are within TradingView. So let's go ahead and let's check to see what companies are within the S&P 500. Okay. So I'm able to come over here on TradingView. You can Google it, do whatever. But on TradingView, I'm able to click on the stock screener option here, click on indexes, click on SPX or S&P 500. And as you can see, 498 is missing two here though, but it's going to show me all 500 of the stocks within the S&P 500. So the S&P 500 is going to consist of a 500 list of leading companies within the world. Big companies such as Nvidia, Microsoft, Apple, Google, Amazon, Meta, AVGO, Tesla, big companies like that. Okay, so if you ever hear the S&P 500, these are going to be the companies pushed all together that control the S&P 500. Okay, now the next index I wanted to go ahead and talk about is going to be the NASDAQ. Okay, so the NASDAQ is going to be 100 tech stocks. Okay, so that's why it's called the NASDAQ 100, also known as NDX, also known as QQQ on options. And SPX is going to be on options, also known as SPY, SPY. So if you ever see SPX or SPY, that equals the S&P 500. Okay. So the S&P 500 is for SPX or SPY, and the NASDAQ is going to be for QQQ for options, and it's going to be for NQ on futures. So QQQ is what my options traders will see, and NQ is going to be for futures traders. Okay. And the NASDAQ 100 consists of 100 tech stocks that move the market very heavily. Once again, this consists of some of the same ones in the S&P 500, such as Nvidia, Microsoft, Apple, Google, Amazon, Meta, etc. Netflix, real big heavy hitters. Okay. And the last index I want to go ahead and talk about is going to be the main one. It's going to be YM, also known as the DIA. Okay. Also known as the US 30. Okay. So if you ever hear the term US 30, DIA, or YM, that is going to consist of what the Dow Jones is. Okay. So Dow Jones has a few names. So the Dow Jones is going to be 30 stocks. Okay, it's 30 stocks such as Nvidia, Microsoft, Apple, JP Morgan, Walmart, Visa, Johnson & Johnson, Home Depot, etc. Disney, So no, these are all indexes. So yep. So yeah, these are going to be the big stocks that we play. So we only trade stocks within the indexes because these stocks have what's called the most volume. Okay, now we're going to go ahead and talk about what each of these things are. And it's pretty much going to be a full basic lesson of the stock market, just so we know what we're going forward. Okay, so that's what all three indexes are. Okay, so if you ever hear the Dow Jones, that's YM, DIA, or US 30. If you ever hear the NASDAQ 100, if you ever see QQQ or NQ, that's that. If you ever hear the S&P 500, if you ever see SPY or SPX, that's that. Okay. And we only want to trade stocks within those three indexes. Okay. Because those are going to be the big stocks that are going to be heavy hitters, have tons of volume, and they're going to make you good money, and you're going to be able to park your bread into those stocks easily. Okay. All right. Yeah. As we continue on, we're definitely going to go over and get you used to the UI, but it's going to be right here to the far right. Screeners, you're going to be able to click screeners, boom, and then you're going to be able to have the list of stocks here. And as we continue on with the mentorship, your stock screeners will be set up. Okay. So now let's just get into some other terminology of what everything is. Okay. So let's talk about symbol. Okay. So if you ever see symbol on the stock market or whatever, that's just the name and the picture of the stock. Okay. So as you can see on stocks, not everything is going to be spelled normally. Microsoft is not spelled IMICRO. It's shortened down to MSFT. Okay. Apple isn't going to be spelled APPLE. It's spelled AAPL. Okay. So one thing we have to get used to is just looking at the symbols, but on TradingView, if you just type in the normal name, symbols will match. And same thing with most brokers. Okay. Next, we're going to have right here is going to be the price. Okay. The price of the stock, which you guys are going to see these numbers here. Numbers to the far right. Number to the far right here. And then you're going to see a number to the far right here, sir. Okay. So boom. All these numbers to the far right in black, that's going to be the current price of what the stock is at right now. Okay. And we're playing the United States stock market. So inshallah, the goal of these stocks is to go up. So as we can see over time, the basis and beginning of price started increasing. As we can see, in 2003, price was pretty much at 0. Now price is at 200. So over time, when you see the number increasing, that means the stock is increasing. The value of the stock is increasing. So over time, the number that you see, the current price, the goal of it is to increase. Okay. So that's going to be what current price is. And the far most right candlestick will always be the current candlestick, regardless of what time frame you're on. So if you're on the daily, the far most right candlestick will be the current one. 4 hour, the far most right one will still be it. 15-minute, the far most right one will still be it. And the thing about the candlestick chart, none of these candlesticks from the past will ever move again. And that's what makes trading so easy. All we have to do is just use past information and be patient. Okay, now let's go and let's continue. Let's talk about change percent. When you see change percent, that's just the amount of percentage calculated into the price that is changed. So if the price of NVIDIA right now is $173 a share, okay, then, and that means this costs $173 to buy 1 share of NVIDIA. Okay, on options, it works a bit different, but we're going to get into that. And yeah, that's how much it costs to buy 1 share. But the percent change is just that percentage calculated versus how much it dropped. So if it's at $173 and it was at $175, then maybe it dropped like 2%. Whatever the math is on that, it just does it for you. Okay. Now, volume. You might hear volume a lot within trading. All volume is the amount of people that are in the trade right now, or the amount of people that are getting in. That's what volume is. Okay. Then you're going to go ahead and have market cap. Market cap is going to be pretty much how worth it something is, how much value something has. Okay. It's the total value of a publicly traded company's outstanding common shares owned by stockholder. Okay. So it's pretty much just its value. So the higher the market cap, the more valuable it is. So as we can see, the highest market cap within the whole stock market is going to be NVIDIA. It's the most valuable company in the world, depicted by market cap. Then it's going to be Microsoft, then Apple, then Google. Okay. So NVIDIA is running everything with the AI chips and everything like that. So those are going to be the important terminologies for the stock market. Okay. So now we know what indexes are. We know what volume is. We know what price is. Now let's get into how to read the stock market and how it works. Okay. So the stock market is going to be readable via the candlestick chart. Okay. So let's talk about what candlesticks are, what wicks are, and how we can read. So in order to understand the candlestick chart, we're going to understand here that each one of these tiny little squares on our screen are going to depict a candlestick. Each candlestick depicts an amount of time and price action. Okay. So let's talk about how we can depict how much time a candle went. That's going to depend on what time frame you're on. So on TradingView in the top left, whatever broker you use, you're going to be able to see the time frame here. If I'm on the daily time frame, and you're going to be able to see the date at the far bottom. If I'm on the daily time frame, each one of these candlesticks are going to represent 1 day worth of price action. Okay. So this is showing me 1 day worth of price action if I'm on the daily. If I were to come over here and go to the 4-hour time frame, each of these candlesticks would now represent 4 hours worth of price action. Okay, and let me go ahead and go to something with electronic trading hours so we can see the normal time. Boom. Okay, each one of these candlesticks represent 4 hours worth of price action. If I go to the 15-minute, each one of these candlesticks represent 15 minutes worth of price action. Okay. Okay. Yeah, for sure. Gotcha. Okay, cool. So now let's just get into everything just from just the left to right. Because everything, even though these things do seem basic, it is just everything. And let's just read from left to right logically. Okay, so market is based off of two things. Okay, support and resistance. Okay, support and resistance are going to depict what contract that we're choosing. Majority of the time within the United States stock market. And the reason why I break it down like that is so we can understand the value. When you're playing the United States stock market, the goal of these stocks and the majority of these stocks are to go within a upwards direction over the period of years. So we have to understand the core value of everything, market cap value, everything, because this is not the same as something like forex trading, for example. Forex trading, the dollar is going to fluctuate on a more year-to-year basis. This is not something that's meant to intrinsically just be bought and hold. As we can see, the highs are way higher up here. So what a lot of options traders and United stock futures and stock market traders get misconcepted is that there's rules, laws, and regulations in place to not crash these stocks to zero. Okay, there's going to be things such as short sale restrictions. So we're not going to be able to eyeball the chart the same way as like a forex trader and plan a short trade, for example. So we have to think as a options trader, we have to think as a stock market trader. People are parking their money in this to buy and hold. Okay, so even though things do seem basic, it's when we break it down from this logical perspective, we're going to be able to get to profits. It's not all just reading the chart, because you could have a great short setup plan, but if some good news comes out because the company is progressing, then price action will reverse because people are going to be quick to buy any dip, versus a forex short setup, for example, where you'll see price having a short setup play out more often or more dramatically. But there's rules, restrictions, and regulations in place to not flash sale stocks to zero. So that's why we need to be thinking like a bull majority of the time. Okay, so in order to think like a bull, we have to understand the full structure of the market. Okay, so now that we understand that, options is going to be a bit different. Okay, so the stock market is going to consist of shares, which you can buy. So $77 per share if I were to buy a Wells Fargo share. Or we have options. Options is going to be where you can pretty much make money based off of prediction in the stock market. Okay. Options contracts are going to have two sides to them. There's going to be a calls side. And once again, on options, we get paid based off of predictions. So within the call side, that we are going to get paid if we think that the stock is going to go up. So if you're calling someone, you have to pick up your phone. Calling up, calling up. Remember it like that. So if you think price is going to go in an upwards direction, you would purchase a calls contract. If you didn't want to just buy the share to just hold, you could buy a calls contract. This is going to be a lot more efficient for short-term holding and making profit significantly faster within a shorter period of time. And within options trading, there's going to be the opposite sense of calls. There's going to be puts. Think of putting something down, So if you think the price of a stock is going to go in a downwards direction, then you'll be able to purchase a put. And people are able to cash in these contracts to actually get shares. So in each options contract consists of 100 shares. Okay, so boom. So then from there, if current price here, and it'll always show in the middle, is 77.78 for Wells Fargo, and I think price is going to go to 80, then I'm going to be able to purchase a contract above the 77.78. So I could buy a 78 contract, a 79, or 80 contract. Okay. If I were to buy a 78 or 79 contract, they would be more expensive, but I would make more money because it'd be like bonus points. Okay. So the more right and the quicker you're right on your prediction and options, the more money you make, which is then going to lead me to the dates at the very top. On options, you're going to be able to choose how long you want to be in your trade. And the longer that you choose that you want to hold the trade, the more expensive the contract is going to be, because it's more likely that that price will get hit over time, especially in the call scenario, because market, the goal of it is to go up. The only reason market flashes downward is to just come right back up. Okay, so boom. So now that we know that, let's go ahead and let's talk about how we can implement this into the charts. So once again, us being option traders and United Stock Market traders, we're not really going to be shorting all too often. As we can see, the goal of the market over the course of years is to go upwards within a staircase. Okay. So ultimately, no matter how much day trading you did, if someone just bought in 2019 and held, they would have been profitable. Okay. So that's when we have to change our whole perspective of the market. We're not here to attack like machine guns. We're here to sit in the trees like patient snipers. Okay. So the market also works based off of two things. We're going to have resistance and then we're going to have support. Okay. So here's how market works. So whenever you see market deciding to make big, sharp fall downs, that's going to go ahead and be indicating an area where people decided to sell their contracts. So whenever you see market dumping downward, all it is people selling. That's all it is people selling. When you see market dumping downward, all it is people selling, because the goal of this is for people to buy and hold. So people in way back here eventually have to take profit. It's nothing's crashing. All it is people selling, okay, taking their profit. And when you see people selling and market making a sharp upside down V reversal, that's going to be called resistance. Okay. So that's resistance. And there's going to be the opposite end of resistance. Okay. And the opposite end of resistance is going to be support. Okay. And support is going to be whenever you see market making a V bounce and then bouncing in an upwards direction. And market is very easy. It's just about patience. Okay. Now I'm going to go ahead and break down this drawing. So if you see market come falling downward and then making a heavy V, and then just starting to see it starting to make some structure. Okay. So whenever you see market making these bottom points, that's going to indicate support. Okay. And one thing we're going to realize is market can only progress if market breaks resistances. Okay. So market can only break if it breaks resistances. That's the only way market can progress. It has to break areas of resistances. Otherwise, people are just going to keep selling in that same area until market decides to get above that area. Okay. And when market decides to get above an area of resistance, that is going to be one possible entry point. There's going to be 3 different types of entries that we're going to be able to take. Okay. 3 different types of entries that we're going to be able to take as United Stocks Market traders. Okay. 3 different types. You're going to be able to take resistance breakouts. Okay. Remember, the goal of the stock market is to go in an upwards direction. So whenever you see areas of resistances correlating in the same area, and then when price finally breaks, you're going to be able to take that. Okay. And we're going to get into the time frames and stuff like that here in a second. But this is just going to be the first model that you're going to be able to trade. Is going to be the resistance breakout. The resistance breakout is going to be the first model we're going to be able to trade. Okay. So whenever price breaks past an area of resistance and then closes, we'll talk about that in a second, then you'll be able to get it, inshallah. Okay. And take it to the next area, because price doesn't want to keep rejecting from this place. It needs to make progress to make some new all-time highs, because that's the whole point of this whole trading thing in general. Next, let's talk about number 2. This setup is going to be bread and butter again. Very similar to the first one. Not entirely the same, but a little different. Okay. If you see price break above, okay, and sometimes price might do this. Price might break above resistance, turn it into support. And as we can see, that's what I was just looking at on Bitcoin. And I'm about to go ahead and buy some Bitcoin here soon. Inshallah, I'm going to go ahead and buy on this dump here. Let me zoom out. And the reason why I'm interested in buying some Bitcoin is because I can see price showing me a little bounce here at this area of resistance. Okay, so I've had this line here for a couple of days, and I knew I was going to go ahead and see at least some type of bouncing in price action from the purple line. Okay, it's not anything crazy. It's just what the type of information that you just inquire from just trading for a long time. Okay, so I know that Bitcoin is probably just going to be buyable here soon, or if not here, it might break past this area, and it might even want to come down to these areas of resistances here. Okay, so I believe Bitcoin within this like 110, 111,000 area here is going to be just the buy portion. And then I believe market's going to go ahead and it went up, fell down, and then we're going to go ahead and bounce back up. Remember, we're here. Boom, and then it might fall, and then we'll break again. Okay. All-time highs, but we buy on the dips though. People make the mistakes of buying up here and they eat the whole way down. Foolish. No. So this is why we buy on the second model. Okay. You buy on break and retest. Okay. If you see resistance turning into support and bouncing upwards, then okay. And on Bitcoin, it's really, really useful. Bitcoin break and retest, it literally just spams it over and over again. Bitcoin is one of the easiest ways to park money and just invest. Take this example for right here. If I just take this area right here, this couldn't be any easier. Check this area of resistance here, and then support. You know, it's not difficult at all. Just break and retest over and over again. It's just about knowing when to buy the dip. It's just about being educated, and I'm not missing out on future bread to not being uneducated, and that's just me. So I really commend you for being here. So boom. Yeah, that's break and retest there. So enough about Bitcoin though. Back to stocks. This is the stock guide. My apologies. So cool. And so that's going to be the second model. Now, number 3, third model. Okay, this model is a little bit different, but I did give this trade out in my Discord. You go ahead and pull it out here. My Discord, I gave this out. WFC calls. Okay. And this is going to be break of support okay, and close the trade there for a win. Okay, you can join my Discord at stackmode.net too. Also need the link too. Okay, so just like we know, okay, resistances can be broken and turn into support. The same thing, support can be broken and turn into resistance. Okay, so that's how forex traders short. For the most part, you should see either two resistances lining up or support turn into resistance. Now, if you're going to short though, sometimes there's going to be examples like this. I have all these trades lined up. Let me go ahead and show you some. Nike, for example. Okay, this is the next trade I have lined up. I can analyze that because just like support can turn into resistance, okay? Take this, for example, right here. Take this point. This little area right here, okay? So this whole area right here, okay? Resistance turn into support, right? Okay, so just like that. Support can turn into resistance, okay? So support can turn into resistance. So if it doesn't, so if price comes up into the support right here, and if it doesn't do that, okay, even if it does do that, if it breaks, then I can get in. So that's what I call support and validation. So that's going to be the third model. Okay, I think I have another setup here lined up on Uber to show you a little cleaner. Okay, right here on Uber, and this one just happens to have resistance lined up. But here I can clearly see resistance right here, and there's going to be support right here. So if I see support, and sometimes there won't always be resistance, because sometimes they didn't retest it, but in this case it did retest, and it gave like morning retest. 9:30 candles too. 9:30 is also 9:30 a.m. Eastern time is also when the United States stock market opens. So if you see price at a level at 9:30 a.m. Eastern, it's most likely an important level, especially when you see it tap multiple times. So I can put my cursor here and see it at 9:30 and use my favorite indicator, market open maker. So this is how I know if levels are decent. So I can go to indicators, go to market open maker, and the United States stock market is open from 9:30 a.m. Eastern to 4 p.m. Eastern. So I can go to here and I can go ahead and peep that price decided to 9:30 break out right at the black line. Okay, so right when market opens, that's one reaction. So I like that here. Right when market opens right here, 9:30, we got a heavy reversal from this angle here. So that's two confirmations there. So that's two 9:30 entries that happened at the same place. And I have a third one over here too. So third one, 9:30, breakout right at this line. So price and fourth one over here, 9:30, breakout right at the line. Okay, so price really likes this level here in the morning time. It's a very important level. And that's what I call 9:30 manipulation. So this is why we trade the stock market. And there's a lot of cool things you can do to manipulate and detect good trades and stuff like that, inshallah. So, and that just comes with experience over time. So yeah, that's what I call support and validation. So that's going to be the third model. Here, for example, as you can see, the support is here. Okay, but there's no resistance. Okay, no resistance at the purple line here, just that purple. Just the support here. And then price broke out the here. But as you can see, this is, if price comes up here, price might not even turn this into resistance. It might just break through it. Or it might do something like this, create a little resistance. And if it does, I like that even more. Just let the liquidity build, and then boom, as soon as it gets broken, I'm good. And take it up to the next areas of resistances. So that's going to be the third model that I use for trading the stock market. Okay, so we have resistance breakout, support and validation, and break and retest where resistance is broken and then turn it to support. Okay, it's three models that are profitable to me. Now, let's talk about time frames. The best time frames that I like to use are going to be the daily time frame. We're going to use our daily time frame to give us our overall broad view of the market, to just let us know what's going on, see the overall trend of the market, see where all-time highs is clearly. Because if we're locked in on the 15-minute, you actually can't see everything that you need to see on one page. You can only maybe see like a month of price action. But on the daily, you're going to be able to see years worth of price action on one page. So you can see it goes all the way back to 2020. Okay, so it's going to give you the full broad view picture. And you have to remember, hedge funds, billionaires, large corporations, entities and bodies of people with millions and billions of dollars come together to invest in stocks. So everyone's on the daily time frame, looking at the bigger picture, looking for good times to invest. Okay, so that's going to go ahead and be that. And let market do its thing, let market dump. And we're going to talk about what makes market dump. Okay, and these little things are going to be called earnings. Okay, you might just see these giant long red candles that come out of nowhere sometimes. So what pushes market downward and upward is going to be earnings. You're going to be able to see these things here. So these are going to be financial earnings that stocks have. Regardless if these are good or bad, the stock is going to do what it wants. Please never trade earnings. Don't ever 50-50 earnings. Don't ever try to make some bread trying to predict financials. The stock could bust out. The stock could have made $10 zillion and the stock could still dump down because the chart is going to do what it needs to do. So don't ever try to buy an earnings contract before earnings trying to predict financial data. Don't do that. It's stupid. Also, be aware of when earnings is going to come out for a company. TradingView is just going to tell you at the very bottom, which is very, very useful. Okay. So regardless of what the earnings report is, the stock can still dump or go up. Doesn't matter. Don't make mistakes. Don't be greedy. Don't gamble. No gambling. Okay. No gambling. Now, that's going to go ahead and be that. And when earnings comes out, market is going to move significantly. Market is going to move heavily. And it's just going to be in a framework of, okay, how do I need to position myself afterward? And this is when you just wait. Okay. So from top to bottom, we're going to go ahead and just mark out a setup. Okay. So I'm going to go through the whole flow of everything I do. And as an options trader, I'm personally only really interested in calls just because there are laws, rules, and restrictions, regulations in place to make stocks not crash to zero. So ideally, I'm trying to be like a long-term investor, and we also have to be like the herd too. And trading, unlike business or anything, trading is the one thing where you want to actually be like the herd. You want to be like everyone else. Because if you're the odd one out, if market is pumping upward and you're trying to short, you're most likely going to get destroyed because that's not what everyone is doing. So you have to trade with the trend and trade at the right times. Now, there's going to be a couple of identities and things to know how and when we can trade. So you're going to always start off on your daily time frame. Once again, your daily time frame is going to give you your full global view world picture of what you need to see on whatever stock you're looking at. So always start on your daily time frame. Always. You're not going to use any indicators. If you need market open maker, please use that because that's really good for detecting levels. Okay. So let's talk about when we can trade and when we can't trade. Okay. So there's going to be two things I'm going to be looking for a trade. Okay. I'm going to want resistance above current price, or I'm going to be looking for support above current price. Okay. So I'm on my daily time frame here, and I can see current price is always going to be the far most right candlestick. So current price right now is 173.72. Might be different on the 4 hour. Yeah, 172.51. That's why we go to the 4 hour also too. The reason why we use the 4 hour instead of doing everything just on the daily is because of this setting right here in the bottom right. Electronic and extended trading hours. Okay. So on the daily time frame, it's not going to show the after hours of the market. So the tradable times of the options market is from 9:30 a.m. Eastern to 4 p.m. But after that, people are able to trade shares. Okay. So the electronic and extended trading hours are going to show you levels and things that you couldn't see before. So the daily is pretty much just going to be your broad eye view of everything. Okay. And a lot of the times for me personally, I like to go ahead and look at my market like this. So if I see price already at all-time highs and there's not much structure or resistances above me, then I know I can't really take a trade without like forcing it. Okay. So even if I'm on the daily time frame here, looking at these 2 wicks, if I put a line at the bottom of this wick here and then go to my 4-hour, okay, the only trade I would possibly be able to see would be a push above like this area of support right here. Okay, if I see price push above this area of support and resistance, then I can maybe get a close from here. Other than that, I think I'm forcing it. Market's already all the way up here. There's not much other resistance above me, and I don't like to force trades like that. So when market is at all-time highs and close to all-time highs, I don't touch it. Okay, just like we looked at Bitcoin, I like to wait for market to dump all the way down into a key area or break some supports. So I'm either going to try and play some break and retest, or as I can see from this example on Bitcoin, I would wait for this area of support to like be broken. Okay. So this area here would be like support and validation. So if price decides to come up and do that and break above the purple line and hold above the purple line, then I know we're good, because that's going to be support and validation. So Bitcoin would be good for me to buy because we're not at all-time highs already. There's resistance above me, there's support above me. I don't mind buying this. Okay, and SPY, we're starting to dump down. Okay, we were all the way up here. There wasn't much to do and buy, but now we're starting to dump down into the areas down here. So now we're getting into more territory of where, okay, I can look for a clean trade. Okay, so when markets at all-time highs, please be hesitant at trading. Don't force trades. Instead, just look around, wait for things that have a discount. Okay, I can see here on Apple, boom, I see price curling at this resistance area twice. And there's some support here. Okay, all I have to do is just wait for Apple to get above this area of resistance. That's it. Once price gets above this area of resistance where it keeps rejecting, I can just get in. Trading is purely just a patience game. Once you know how to read resistance and support, it's purely just patience and gap fills. And I'm going to take this. Yeah, yep, this is break and retest. Or sometimes I might just do this. Sometimes you won't get a retest, but there's going to be ways to confirm that. That's what we use the 15-minute for. Okay, so we don't just get in the second it breaks. No, you want to wait for it to break, and then you're going to be able to see a timer to the far right on TradingView. Okay, so each one of these candlesticks represent 15-minute. So if I'm to the far right here and I see my timer, once one 15-minute candle closes and it can't move anymore, if it were to do that above the line that I wanted it to do, then I'm safe to go ahead and get in. Okay, so same thing right here. Gold, I have this area of support marked out with this resistance. Okay, once price gets above that, if price gets above this and holds, then I'm good. Because if price doesn't do this, and even if it does, that's fine, because it's not going to keep doing this. One day it's going to break. And the day it breaks, I'm in. And I don't care how long it takes, because I'm going to wait for my A+ setup and I'm going to make my money on. I'm going to get in and I'm ready to hold the whole thing. Okay? Because remember, support can turn into resistance like it did here. Support turn into resistance. If it does it again, that's fine. Don't get mad. Don't get poopy pants. That's even better. Just wait for the level to break. Because one day it'll break and you'll be there, inshallah. You'll be there. And collect your bread. It's just about being patient and staying down. That's all trading comes down to. Yeah, exactly. Yep. And yeah, we'll talk about alerts as well too. Great question. Thank you, sir. So yeah, in order to get alerts too, you can just right click your screen on TradingView, whatever broker that you're on. You might just look at something on Robinhood and have alerts too. So you can click on add alert, click on every time. This way it'll spam every time price crosses. Go to notifications, you can notify yourself, send email, etc. And yeah, and that's gonna go ahead and be that. All right. So cool. So that's going to go ahead and be the crash course of the United States stock market. Now I'm going to go ahead and make sure we have